Power Producers Shop Talk, where we are refining and redefining the sales game by equipping you with the tools you need to differentiate yourself in the marketplace.
Listening to the podcast is only going to get you so far. Why not take your game to the next level? Check out Power Producer Basecamp on killingcommercial.com today.
Tactical skills that'll help you provide deliverable value to your clients and prospects.
Want to have the sweet swag that we send out from the Power Producers podcast for your clients and employees? Check out policyt.com today.
And action items that you can provide to take your prospects and clients to the next level.
Want to create an online presence but don't know how to start? Check out crushingcontent.com. It's done for you, so all you have to do is show up.
This is Power Producer Shop Talk, production redefined. Are you ready to feel the power?
What's up, everybody? Welcome to Power Producers Shop Talk, where we are refining and redefining the sales game. And today, we got a good one. We got a good one lined up for you. We're going to talk about something that I think every single one of us has encountered and struggles with to some degree. And that is the delicate balance between our duty to offer as an agent and the appearance of us overselling to our client or our prospect. And this is something that I think is tough because I see both sides of the issue, but I think that one of the things many agents don't do a good enough job of is educating their client on our duty to offer and why that's important. Explaining to them that they're going to have selective amnesia at claim time if we don't offer and have them reject down to whatever they buy. And really, where I find this to be extremely relevant in our book of business is on cyber liability and understanding the limits that you should recommend and ultimately make sure you have rejections down to whatever your client or prospect decides to buy. And it was evidenced when we had Zane Goldthorpe with Pro Riders on a few months back. And I literally stopped in my tracks because I asked him the question, how much is the average cyber event or how much is the average cyber claim ultimately settle at these days? And his answer was $4 million. And really, that doesn't sound like a lot of money in the grand scheme of things, especially if you're dealing with larger companies that have a little bit more revenue. But my first thought was, how many $1 million cyber policies do we have in our book of business? Like, don't even count the people we never offered it to. How about the ones we did offer it to, but we only offered $1 million when their real exposure is 5 or 6 million? And so I got to thinking immediately, we need to get better at this. Not only do we need to offer cyber, but we need to offer reasonable and prudent limits that somebody can say, okay, I get it. Yes, I understand that could happen, but I'm only going to buy $1 million anyhow, and make sure that they understand they're rejecting and going against what your best wishes are. But that can be perceived as you just trying to sell another policy to make more money. So there's a gentle balance that has to happen there. But I think the first thing that's really, really important is just understanding that the duty to offer is a professional responsibility. We gain that professional responsibility once we get licensed. We have an obligation at that point. We need to offer our clients and prospects coverage that reasonably addresses their needs and their risk. It can't be, selling them like a $20 million umbrella when they're a florist in a strip mall with minimal, liability exposure. It needs to be reasonable and prudent, but we have that duty and that requirement to offer them. And by failing to do that and offering appropriate coverage, we're opening ourselves up for an errors and omissions claim. I mean, it's just the nature of the beast. It's why we carry E&O, but we want to do our best to avoid having any of those claims brought against us. And so just simply taking the time to explain why you have this duty to offer to a client may be enough. They rely on us to serve as trusted advisors to them. We should be able to guide them through all of the different complexities of the insurance products that we have, keeping in mind that we speak fluent insurance and they don't. So we do have a need to educate sometimes and make sure the language is digestible so that they truly understand what we're recommending to them. But I think it's important that when we do that, we maintain the perspective that this is not just about selling insurance. It's about making sure your client is completely protected and that their assets are safeguarded so that they can have some peace of mind. I also am a big believer in not insuring for everything. Like your clients need to take a healthy amount of risk. They need to take as much as they can afford, especially in this market. So if you're truly educating your client about risk and showing them here's what it costs to insure, here's what it would look like if you don't, insure, you would save this much money. Let them make those educated decisions and push back where you need to push back, but you don't have to push back every single time. I've said time and time again, I want my clients to take healthy, quantifiable risk. I want them to understand exactly what's at stake if they lose a risk that they've chosen to self-insure for. Building $500,000. If you lose the whole thing, you're going to lose the replacement cost of the building, plus the cost to get the debris out of there and damage, the demolition of any undamaged portions, like all of the things that we're coached to offer in terms of increased cost of construction and ordinance and law, and all of those things get piled on. We have to educate them and make sure they know. But if they say, you know what, I'm good. I'm happy with taking that amount of risk. I understand what's at stake here. Get them to sign off on the fact that you're recommending they go one direction and that they completely and fully understand that they're going against your best recommendation, and they're doing that willfully, and they understand. I mean, it's got to be very, very specific in terms of how much they understand it, but let them make that decision. They're grown adults at that point. They know what's on the table. They know what's at stake. Let them do it. But when we fail to offer the appropriate coverage, the consequences are bad. You can cripple somebody's business. You could keep their home from getting replaced. And that's not a good situation. As agents, we need to do better. We need to make sure that even though it might be awkward, even though it might be uncomfortable, even though we may get accused of hard selling and trying to push somebody to buy that one more thing, we have that duty. We have the duty to offer, and we need to fall back on that. We are responsible for offering policies that align with our customers' exposures and their potential liabilities. And by fulfilling this duty that we have to our clients and prospects, it requires understanding every one of their unique situations. This is one of the reasons why I feel like everybody should limit themselves to just a few ideal prospect profiles. I don't think you throw all your eggs in one basket, but I think that you throw your eggs in 3 to 5 that you know really well and that you can understand the different exposures they face, how to risk manage those exposures, whether or not you should insure against them, all of the things that we do every single day. But if you're trying to do that for 50 different kinds of businesses, it's going to be an absolute disaster. And I know that there are people out there. Look, I love Charles Speck to death. I think he teaches a great message, and he's all about the micro niche. And you know what? If that's what works for him and his students, by all means, who am I to criticize that? And I don't, because I know that that works. Just like I know that there's agencies out there that do very, very well as being generalists. I don't criticize them either. I'm simply telling you my personal thought process is go three to 5 deep on your ideal prospects. Do that with every producer, and that way your producers can be specialists as much as they possibly can, but the agency itself can be a generalist. One of the biggest challenges that we have to face is overcoming that whole misconception, though, that we're overselling and that offering additional coverages equates to that. Many clients may view any of the recommendations that we have for a few extra policies as a pushy sales tactic. However, there's a big difference between overselling and responsible risk management. I think that if you start by focusing on the exposures first and then offering different methods to manage the risk around those exposures, you soften the blow a little bit. Show them they can self-insure. Show them they can insure at one level. Show them they can insure with a higher deductible. There's a bunch of different ways to frame it, but if you just go in and it's here's how you fix the problem and it's buy this policy with this deductible level without any real explanation or real alternatives, you're probably not going to look like you're in there to solve a problem. You're going to look like you're trying to sell a policy. And I don't blame a client or prospect for thinking that way if that's the case. But if you're taking a value-based approach and a risk management / total cost of risk approach, and you're showing people this is what it looks like, here are your exposures, which is what we identify when we talk about doing our baseline risk assessment, and then subsequently identify those in the risk assessment reports that we provide our clients. By going through that process, they can see that insurance is one way, self-insurance is another way, modifying how they're approaching it now. What can we do contractually? There are a bunch of different ways to do that, and we need to talk through those things because not every risk needs an insurance policy. That's the difference between thinking like an insurance agent and thinking like a risk manager. That's some of the benefit you gain when you get your CRM designation in addition to your CIC. But I think the other thing is just understanding what the ramifications are to our own errors and omissions. I mean, having an E&O claim is one thing, but having an E&O claim that has a negative and detrimental impact to your reputation in the marketplace carries long-lasting effects above and beyond just going through the process of dealing with that claim. You're going to lose business, you're going to lose opportunity, and in many cases you may lose your role in the industry if nobody can trust you any further. So understanding that you have that E&O exposure and that you need to offer somebody what is appropriate is really, really important. And I think it doesn't just pertain to the P&C end of things. I've heard people who are really good life insurance salespeople talk about this in the life world as well, talking about what would it be, what would you rather do? Offer life insurance to a client or have to explain to that a client's widow or widower that you never asked the question and they never bought as a result. And that's a tough pill to swallow, I think. I don't think I'd want to have that conversation, no matter how uncomfortable it is to have the life conversation. But why do we even make that the case? Why do we put that much pressure on us? It's a natural conversation to have. If we are in the job of protecting companies, assets, individuals, then we need to have the conversations around doing that. Again, educating on risk exposure is crucial to that whole process, though, because I feel like if you lead with that, then the solution piece becomes a whole lot easier to deal with. I think the other thing that we have to make sure that we do is we have to lead with empathy and understanding. One of the things that I make sure every one of my clients and prospects knows is that I'm also a consumer of insurance products in the current market. Like, I get it. I have to go out and buy insurance myself. My home insurance has gone up 4 or 5x from where it was when we moved into our house. Our auto insurance is 2 or 3x where it was a few years ago. And we're clean. We have good credit. We don't have accidents. We don't have claims paid out. That's just what the market has done. And so if you can talk through that and get them to see the human side of who you are and be empathetic in your approach, and so they can say, hey, look, okay, I get it. There is no employee discount, I guess is what I'm trying to say. We don't have a card we can slide that says save 25% off your premium. We are subject to the same rates that everybody else is. And that's really important to explain to your clients and get them to understand, because if they think, I think too many times they feel like we're tied at the hip to the insurance company, that we're not out going to multiple carriers to get them the best deal, and that, we're the ones who set the rates. Somehow we're the bad guy, when in reality, we're just the messenger. Being able to explain those things is really, really important. One of the ways you can do that I would recommend you try, and that you proofread, because you have to proofread everything that comes from generative AI. But if you don't know how to explain a complex insurance topic in a way that the average person's going to understand, I'd highly recommend you type your answer into ChatGPT and ask it with a prompt to rewrite that for you at a 6th or a 7th grade reading level and see what it generates. One of the best Facebook posts I've done around this topic has to do with reinsurance and explaining how reinsurance works to the average person out there. And when I put that post out out and explained it to the people that were in my community, not, insurance agents, people who are in my community that, are complaining about their current rates and everything. It was interesting to me to be able to see the comments that they put out about this makes complete sense. See, the problem is we all operate in silos at this point. The internet and video games and, virtual reality and all of these things allow us to live in our own worlds. The news is served up to us based on algorithms of what we consume, and it's not necessarily telling us everything we need to know about different parts of the country. I was on a call with a member of Killing Commercial today where we were talking about the hurricane that's sitting out in the Gulf getting ready to hit Florida allegedly. And he's like, I didn't even know that there was a hurricane. That's because it's not in his Facebook algorithm or his LinkedIn algorithm. He's not being served about hurricanes getting ready to hit Florida. He lives out in California and he gets a completely different message. And I think that a lot of times, because of us operating in silos and being isolated like that, people come to the understanding in their own mind that insurance only applies to them. It's their individual home that's being rated, their individual claims experience. Everything is about them, when the reality is that's not the case. Things like reinsurance impact rates, things like the geography, the zip code you're in. Even though you may not have had a storm on your street, you may have had a bad history or proclivity for weather events in your area. You may be more subject to cars getting vandalized or things like that. I understand all of that from an underwriting perspective. Your clients and your prospects probably don't. And so by taking those concepts and making them easy to understand and taking the time to educate, your sales call may take a little longer. But guess what? You're going to close more business. Your close rates will be higher because if you're a good educator, you're not going to need to close. It will close itself. And if you do this with video proposals and video presentations so that they can go back and be watched over and over again and even shared between spouses, man, that's the gold right there. That's the stuff that's going to really separate you from other agents that are out there competing against you on the streets. So, if you struggle with this, hopefully some general thoughts, be empathetic, introduce risks first, and then how to address them. Talk to people about where you come from and that you're in the same boat that they are. But hopefully that softens it up a little bit for you and helps you when you go out and you explain these things. I don't think that people are going to quit taking their shots when they can. I think they're always going to, at least poke fun at us to a certain degree while they're half serious about it. But it'll make you feel better, and it'll also keep you out of hot water at the agency level and the producer level, especially with your E&O. Now, if you also want some things that are going to help you stand out in the marketplace, check out crushingcontent.com. If you're looking to get your personal brand or your agency brand out there, the team at Crushing Content is who I use for everything at Florida Risk Partners, Killing Commercial, Power Producer Basecamp, Power Producers Podcast, you name it. Crushing Content handles it, and they do it for a nice group of other agents across the country. Check out the testimonial videos on the website. They can tell you exactly what Crushing Content has done for them. Until next time, see ya.